Greetings everyone, welcome aboard. Joseph James here, schooltrade.com. Today was June 18th, 2010. Happy Friday to you. Quadruple witching, OPEX Friday. Before we talk about the trades we took today in the room, guys, on a very sluggish, challenging Friday here, there's a link below the video to our blog, guys. Our blog has live trade calls on it, has videos on it, has articles on it. Three important things, though, when you go to the blog. The first thing, make sure you follow our blog. All right, that way you get all the important stuff. The follow button is in the upper left-hand corner. In the upper right-hand corner, you'll see the box for the search box. Use that search box to make sure you're always searching for the topics you want to talk about. Want to know more about dollar index futures? Want to know how to draw trend lines or find double tops or double bottoms or how we use market profile? Use that search box there. And then the lower right, you can find us on YouTube, follow us on Twitter or on Facebook, guys. Lots of great stuff there on the blog, and the link is right below the video. Make sure you guys check it out. We only took 3 trades today, guys. We tried our best here today. We weren't expecting very much. Okay, quadruple witching this week, and of course today was options expiration Friday, so we had a mountain of reasons to be concerned today. We took 37 ticks though, $438 out of the market. That brings us just shy of $3,500 for the week. Over $12,000 for the month, guys. We're having another huge month of June here. We did 8,700 in April. We did 17.6 in May, and here in June now, with a good 2 full weeks left, we've already made 12,000 bucks. So if this continues, guys, we're going to be right above that 15, 16, 17,000 mark here come towards the end of the month of June. Now is a great time to get started as advanced members. Let's see here. What's the most important that happened today? Well, Fridays are oftentimes slow, right? They can end earlier than other days of the week. But today was a special Friday, right? Today was quadruple witching. Today was OPEX. So tomorrow morning on Saturday morning, right, you've got 4 different asset classes all expiring, and today is the last trading day of those 4 different asset classes. We talked about it today in the room. It's posted on our blog under the trade room notes, and of course we expected to see a very slow day today, and we got exactly what we expected to see today, guys. It was one of those days where we knew exactly what was coming. It was up to us to simply wait patiently for the very best patterns. Now we first start looking at the dollar. We always start each day with a dollar. The dollar tells us a lot about what to expect everywhere else. Now, what do you see here in the dollar, first of all? First thing I see is we are right here now, double bottoms, with where we were 1, 2, 3, 3.5 weeks ago, right, on the dollar. So at that double bottom, that's going to tell me, guys, expect to see a lot of chop and slop here. Now, chop and slop on the dollar. Yeah, you guessed it, or it's going to be choppy and sloppy on everything else. So it just so happens, right, that on quadruple witching day, right, the kind of one of the worst days of the year for trading, we just happen to be at a double bottom on the dollar. So add some more fuel to that fire of why we want to be careful today. Now, this was one thing, but look at what we saw next. Now, when we went to our fast time frames, here's what we saw next. And this is something that every new trader needs to learn how to identify here. This is worth its weight in gold, right? Or should I say dollars, right? Excuse the pun. But basically what we're looking at here is, look at the trading range on the left side, right? This is yesterday's trading range right there. Okay, that's yesterday's trading range. And then compare that to today's trading range here on the dollar. Okay, so you've got, boy, from 86.8 all the way down to 85.8. Okay, so what is that? That's 100 ticks. That's 100 ticks. And then today we've got 86.1 down to, we'll say, 85.7. Okay, what is that? That's 40 ticks. Okay, so we literally have 50% of our trading range, right? 50% of our trading range from yesterday. Okay, so narrower trading ranges, that means the rest of these markets are going to be very narrow as well. So what always helps is look at your fast time frame, right? Zoom out a little bit and take a look how wide it was yesterday compared to how narrow it was today. Now, of course, this was a dollar. I wanted to see if this, of course, would hold true in other markets, and of course it certainly did. Here on the euro, great example. On the left side, you see the trading range from yesterday, right? On the right side, the trading range from today. Okay, see that? Very easy now to see. Much wider trading range, right? Much wider trading range yesterday than we saw today. Okay, so narrower ranges, that's going to mean obviously less profit potential, more chop and slop. Guys, this is an easy way at the beginning of your day to get a good idea of how the market looks as it sits right there. Okay, so we obviously took 3 trades today, guys, but we knew because of this stuff, we knew we had obviously we had to be careful, right? Because we're not going to see the easy moves. Now, what I talked about earlier this week was I began to use multiple time frames, okay, to determine when I take my trade. So I'll use a 4 range chart, I'll use a 13 range, and I'll make sure momentum confirms on both of them. Okay, so we'll look for a little more confirmation today. We only had about 3 or 4 opportunities here. I missed one of them. We'll show you guys that in a second here, but the first trade came up here on the Euro today. We took 2 trades in the Euro today. It was a good day in the Euro. We had a great week in the Euro this week. Okay, we got the short-term trend coming to the downside. We're going to bounce off the low of day here. Now, guys, this is a 13 range chart, so keep an eye on that, right? This is a 13 range. This is similar to a 7, right, to a 10-minute chart. Okay, the 13 range chart. Now, of course, range charts have no time variable, so it can be much faster than that, but that's about right. Okay, now on the 13 range chart, we're not going to see this pattern on a 4 range or an 8 range. Okay, a 4 range or an 8 range will make it look all sideways and choppy. Okay, so it's the 13 range chart here that I want to look at. And this pattern, very simple pattern, we come in and whenever we test the low of day, right, whenever I test that low of day, I'm always looking for what? I'm always looking for a bounce off those lows. Okay, so what do? We mark up our swing high here and we take a break above the swing high. Now, under normal conditions, this would be a nice, easy pattern, but under today's conditions, this pattern took a long time to set up, very slow and sluggish. As you can see, we didn't get much movement. Look at this. Down bottom here, you've got 640, and then here's 1230, right? There's 6 hours, right? 6 hours between these two. Okay, that's a lot of time to pass for very little movement. Okay, so the market was definitely not in a position to give us very much today, but we were able to grab this 2-step pattern long here. We bounced off the lows at 1025, and of course at 2390 was our fill. We got our +7. Now, of course, this is on a 13 range chart, so these are a little bit wider targets. I'll start out at +8, +16, and then a runner. But of course, in this case, we had to be a little bit more aggressive with taking profit here. I took profit at +7, one off at +10, and then one off at +3. Okay, so that's of course 2 off at 7, that's 14, 24, 27, and of course at 1250 per tick, that's going to be 33.75. Okay, so we got just shy of 350 on that trade, guys. Obviously, we would have rather have had it really jump to the upside for us, but we obviously want to take what we can get here. Now, follow me over in the lower right-hand corner. Okay, in the lower right-hand corner, guys, this is my trade management chart. Okay, we manage our trades using our trade management chart. And now, guys, I wanted to point this out to you because we had an example today in the Euro while I was in this trade that told me whether to hold the trade or to fold the trade, right? How do we know if I'm in a trade with my last contract and I'm trying to decide, do I keep the trade on the table, right? Try to see this thing, go a little bit better for me, or do I cut the trade now and take my money out of the market? Well, guys, this is a great example here, and I want to focus on 2 things. Okay, the first thing is price, and the second thing is the MACD. Okay, now watch what happens here. On the first example, okay, watch the MACD. The MACD breaks below the 0 line, and you can see there's my lows on my MACD. Okay, now look at where the price goes. Right, price here 23.98 is right there. Okay, now that alone is pretty much useless. Right, that information alone is pretty much useless until we see the next move down. Now watch. MACD. Where's the MACD now? Down bottom here. Look at it now. Now, is this MACD, is this lower than we saw over here? Yes, it is. Okay, so I've got lower lows on my MACD. Now follow me back up to price. Where's price? Price is actually exactly the same, if not higher, at 23.98. Okay, so what do we call that, guys? We call that divergence. It's called regular divergence. All right, I'm sorry, it's going to be hidden divergence because the indicator made the new low, but the price did not. So now we would expect, of course, we'd expect for price to now jump. So I'm in a long trade right now. I see this hidden divergence. And basically what this tells me is the sellers did everything they possibly could to push this price down. And we can see that in the form of a lower low on the MACD indicator. So the MACD gets a lower low, right? Think about that. That means the sellers are pushing hard, right? They're trying as hard as they can to push that price down.